Okay, good morning and welcome to the Minervini Private Access Trading Room. I'm Bob Weissman. If you can raise your hand, let me know that you're hearing me loud and clear. Hope everybody had a nice, uh, calm, safe holiday weekend, relaxing. I know I did. And let's also get started with welcoming Mark Ritchie into the room. Good morning, Mark.
Morning, Bob. Morning, everybody.
If you could just raise your hand real quick, let us know that you're hearing him loud and clear as well. That looks great. And then let's get started with today's session with Mark Minervini. Good morning, Mark.
Okay, good morning, everyone. Hope you all had a good weekend. Let's take a look here at the overall market. Right now, of course, you can see we're under pressure. Nasdaq's getting hit the most, down 2.31%. This is following up on some of that distribution that I talked about over the weekend, which was somewhat mild, but we did have three distribution days within this right-hand side, if you will, of this base that we're trying to build. Now, of course, this looks quite ominous here today, but it's not so far as bad as it looks. And again, that depends on looking at different names. We have some that are unraveling here a bit, something like an NVMI coming off really hard here. Still could build the right side, but this is a pretty big pivot failure that's going to take some time to repair. Then you have something like an AOSL, which again, we need to see this recover. I'd like to see it hold up better than this, but this is somewhat normal. A little bit excessive, but somewhat normal, building this right side, going into some supply here. So this is why we will take some of these short-term profits and sell maybe half the position, cushion the trade a bit in case it comes in harder than we think, and also to fully finance those stops if we can get a trade to run up as much as we have the stops. Say stops 8%, runs up 8 or 10%. We sell half of it. Now we finance that stop, and we can go through these type of pullbacks and get this type of volatility and not be under so much pressure. Similar situation, of course, what we did this morning. Of course, we got hit on GE, which is showing some excess volatility here in the Minervini Select portfolio. We also got knocked out of Meta. Now, and let me just take some of this stuff out of here. That's what we want to see happen, some tightening. Again, there's not really, this isn't really doing anything dramatically wrong. It's still building that right side. We went in there on the pullback buy as it turned up, and it's not coming to fruition as we expected. So we're keeping the stops very tight. Again, not a whole lot of traction. And I'm going to talk about the Minervini Select portfolio on another day. Maybe this week we'll have a separate session that will just go over just those trades. But until we get some significant traction and some profits there, we've only been at a low single-digit profit in that portfolio. We're not willing to get aggressive on the risk side, so we're going to keep the stops very tight. We'll attempt to get in there on the pullback buys, on the breakouts, but if the trades don't work out, we're turning tail pretty quickly. Now, when we look at, I'm just taking a look at the open positions here. ON up about 10%, 6%. We got a few single-digit winners here. Teva, of course, still up about 7%. FRPT, even MIRM. But it also have more than half the trades that are at single-digit losses. So this is where, again, the rubber needs to meet the road, and we're getting tested here. Let me just pull up a few others. So of course, GE, I mentioned GE. We've got Goldman Sachs. Some of the bigger names, the big cap names, seem to be getting hit here, and we're getting that pivot leakage, what I call leakage. NVDA, of course, NVIDIA, also getting slammed here. But similar to the NASDAQ, of course, these big cap names are going to track the NASDAQ pretty much. TSM, another one where it didn't hold up. And now shaking out that right side, but is this completely broken apart? No, no. This just means that it may take more time here, and we need to build these right sides. Money rotating maybe a little bit defensively with something like an EAT breaking out, but we're certainly squatting here. We also went into the XBI, but that turned tail too. It was having some relative strength here, and now an outside day also showing some pivot leakage here. So we may get pushed around a bit here in the short term, but so far things are still constructive. I wouldn't get too nervous just yet, but keep the keep the stops tight and don't take excessive risk until you start getting some traction here. Mark, any comments on we can't seem to get much traction. I would assume that in your own trading, you and Brandon are having the same type of frustration.
Yeah, just sort of jockeying back and forth, and you lean on a few positions that are working, and then the next ones start to knock you out. In case like TEVA, stock's not doing anything wrong, but when you're leaning on something, and then like if you ever leaned on a door and it starts to move on you, well, you got to move your feet quickly. Otherwise you're going to fall over. So yeah, this is where you just run through your worst case scenario and figure out what you're comfortable with and tighten things up.
Yeah, I mean, selling half of Teva had nothing to do with anything the stock has done wrong. We would have liked to stayed with it and not sold any of it. But as we start to get some losses and get some pressure on some of the other trades, we're going to offset that. We're going to offset that, and like I said, I'll go over the math behind the trades that we've made and the grading of those on a separate session. But that's part of just managing the risk and playing sort of the middle road there. I'll let you guys, if you have any questions, of course, that pertain to anything, you can certainly ask them today. Something like an ALL, we're only up about 4% on that. It's acting really well with money obviously rotating a bit defensively here, but not a whole lot of profit to really take here. So we're not gonna sell the stock. It's acting fine, but something like the Teva, where you're up 7% or so, that's sort of like that borderline where that's a big enough profit to offset some risk and to finance your stop. Let me see if there's anything else. Let me just go over a couple other names that are something like an ANET. You see, again, we're building that right side, and this still has not broken apart. This has not failed. It just means that we need more time. HIPO. These are some names that I'm watching. And again, you see you're coming off here a bit today, but that's just building that right side, that pivot. So we still have, maybe some work to do. Even a Uber's building that right side here, actually holding up pretty well. SPOT, Spotify, trying to stay tight here, leaking off a little bit here, but still staying tight on that right side. Wing is another one where you're coming off a bit here on a fourth lower low, but this could rally in a day or two and be setting up that right side and tighten up and have a really good setup in just a number of days. Even something like a WIX, where you had a reversal here off that short pivot. This is still building that right side, and we can get a reversal recovery within days or weeks here. Let's see what else. TNDM. Again, building that right side. See, still holding up, and that area up here around 4650, we want to tighten up. If we can get through that, FIHL. Just going through a number of names that I'm keeping an eye on because they had pretty tight action on the right side, and now you're getting some leakage. Now we want to see if they can hold up. Now there's some that are falling apart worse than others. This BLFS is holding up fairly tight. Something like an AEYE. This is down about 10% today, but again, still holding in that in that right side. Needs to tighten up though. Some of these need to tighten up. CORZ down about 7.5%, but still building that right side. So you got to keep things into perspective here. There's a number of names that are down decent single digits here today and some double digits. But if you look at the charts, they're still building that right side, and it looks like we just need more time to build out those right sides. So not enough damage here for us to get too concerned at this point. We're still in that I think the stem reading of orange is still the correct grading of this market. It's not an easy dollar environment, but it is an environment that's not hard penny, that it's so bad that we need to be in 100% cash and not entertain new ideas. So let's let you guys have the microphone here, or the stage here, and ask some questions.
Easy enough.
We're
Actually,
still short SPY, so we got a little bit of a hedge here. We have not been knocked out of that yet.
one of the questions was asking about Uber, so we already answered that one. And one of the questions, speaking about SPY short, was asking by Vinod if with the SPY strategy 25 and 33 on green with 100% invested, what is the rationale or reasons to have the SPY short position?
Well, first of all, the SPY ETF model is a mechanical model, and that's a long-term investment strategy. So within that, there's minor fluctuations in the individual trading, whether it's the Minervini Select portfolio or even the open positions on the platform. That's more of a swing trade. That's where we are swing trading the ideas and shorter term trading. So that there are two different approaches here. So yes, long term. SPY looks fine. Shorter term, we put it on as a potential pullback in the S&P to take advantage of a potential pullback, and also ended up being a default hedge on the longs here.
All right. Excuse me. Question being asked about Kelly asking on the DNTH. Why that didn't make it to focus, which was there last week, I believe.
Yeah, just looking for it to tighten up a little bit more. It could easily make focus. I mean, it's we have it on high on deck here. So just watching it, if it tightens up a bit more, if it stayed inside and started breaking out, we would move it right to focus. So it's a borderline focus name. It's fine. It could be on focus. It might be one that we just slipped through the cracks here. But we have a bunch of names, like something like a DKS, which is still holding very tight here. The OSCR, we waited to put it on. So there's a number of names. There's a very big watch list of stocks that have these right sides being built. I think we went excessive on focus, so we put maybe even too many names. So that's probably why also, because we did have a lot of names and some of them still need some work. But I put names on focus either if they're viable at currently, or if I think they could be viable within the week, by the end of the week. So and that's where DNTH probably could meet that criteria.
Also asking about PRAX, if that's close to going on focus, or is the previous supply too much of an issue?
Yeah. No, well, I mean, this is a huge decline here, and this isn't one that I really know a lot about, to be honest with you. But I see, just looking at this base, it's a nice base being built, and you've got a right side here. It needs to tighten up a bit, but I'll take a look at it and take it under advisement, and we'll take a look at this one.
Question from Michael is seeing NVIDIA struggling here today. Should we even consider buying setups in other semiconductors?
Well, I mean, if NVIDIA can't lead, that's certainly, that certainly doesn't bode well for the group. I think, NVIDIA is the key leader. But again, this hasn't fallen apart to the point where, I could even make a case for buying some right here and setting a stop a little below today's low and seeing if it recovers. This is probably where, if it's going to set up and the market's going to hold up, you might get some support here and get a good close. So I want to see how we close today. But if it didn't close good, I'd probably just get out of it, or within a day or two, maybe give it a a time stop of a couple of days or a few percent down. If you want to try to bottom fish here, trading near the danger point, this is where it needs to catch some support. But as far as the other semis are concerned, I take things on a stock by stock basis. I don't really let one stock keep me from buying another one unless it's a key leader that has a major break. And then even then, you could still get a rotation into some of the other names, although you're probably not going to get as big of a move, in laggard stocks as you are in the leaders. And if the leaders can't hold, and this is where, just go back and read my first book. I talk about it in the second book too, but in the first book, I talk quite extensively about leaders leading and topping ahead of time and so forth. There's a really good discussion there about this. But again, would I stay away from all semiconductors? No, no. But you've got TSM that got cracked here. You've got NVIDIA. You've got some of these tech stocks here that are under a bit of pressure. So you need to see if you can start getting some stabilization and some tightening up and take it incrementally, one trade, one day at a time. And again, it's all about on balance too. How are things, Mark Ritchie often says, he uses the words on balance, where, okay, when we look at right now, we look at overall open positions. On balance, we're still holding up fairly well. That could change very quickly, though. But on balance, we don't really have a lot of traction. We have it's about a wash at best. So that's not enough traction to get super aggressive. When I say super aggressive, I'm not just talking about exposure, because we moved up pretty quickly in the select portfolio, but with super tight stops. So that's why you've seen very little downside in that portfolio. So I would take it from a very low risk standpoint, if you're going to trade in the semis, that's all, just like I would in any other stock trade at this point.
Okay. Question. I just lost. Okay. Eric bought MCY on August 22nd.
Yeah, it's been holding up well till today.
Moved to an overweight position on the 23rd. As the price advanced, he moved the stops to break even. And today he reduced 25% of the position. But now, with the change in character, he's questioning if he should have reduced further to ensure profit.
If you're a really short-term trader, you probably should have sold some right into the strength. And this is where, again, so I'll give you guys a very key thing to think about. So if you're short-term trading, and I say short-term trading, I'm talking like the 5 to 8, 10% sort of profit range, not time frame, more percentage gain that you're nailing down. If you're short-term trading like that, using downside sell rules is kind of counterproductive, because by the time you get the evidence that the trade is moving against you, you give up a lot of your gain, especially if you're taking the really short-term moves, the 5-6%, sub 6% moves. By the time you see that the trades moved against you, you're up 2%, 3%. So it's counterproductive. You want to use strength for selling. If you're playing for bigger moves, well, then you have to go through some pullback, and you can let, like a day like today at MCY, this is not a change in character, not at all. This is quite normal. Stock broke out, moved up here, markets coming under pressure here. I want to see how it closes. That's really important, and how it trades over the next few days. But this is, could be deemed a natural reaction. A week or two from now, this could be a new high ground, and you'll look at this as just a natural reaction. But, again, go to Monolith, right, and take a look at, are violations piling up? Is this a violation? And you'll find that, in the bigger scheme of things, that, this is just normal fluctuation.
Question being asked, how do you view a breakout that slowly grinds higher, like a Teva, versus something that gives a good gain immediately but becomes short-term extended, like ONON? Does a slow grind make you less inclined to de-risk the trade quickly?
Not necessarily, no. I mean, stocks have different types of character and, ON's acting really well. Um, Teva is acting good also, and it is a slower mover. Maybe even ALL, is kind of grinding its way higher, but um, it's not as big of a percentage mover. ON is, again, I would go to Monalert, and if I were just to look at this trade, Monalert is just a technical rendition of what my own eyes look at. We've made everything in the trading tools around how I trade, and I would just look at this and I would immediately see that I got one, two, three, four, five, 6 out of 8 days up. Some good closes, some good net progress, very little pullback. It's acting great. You don't have much in the way of any, selling on the downside here as far as volume coming in. So this stock is acting really good, but could I differentiate and say that, it's acting a whole lot better than say whoops, why is that not coming? Sorry guys, hold on. I don't know what just happening here. Something is going on here with my, don't know why I can't type a symbol, but hold on, I'm just hiding this here. Okay, let's see. Okay, there we go. Sorry about that. Just got to fix my screen. Could I differentiate and say that, Teva's going to go up more or ON's going to go up more? I mean, I like the action ON. I like ON better. My own, gut from and read of, applying a leadership profile to the stock. It looks, better, but I couldn't tell you, which one is going to go higher from here and which one's going to reverse on me. You look at this, you're not going to see any violations either. You're going to see almost no violations looking at Monalert. So you might want to take a less, emotional approach or a less arbitrary approach and just use Monalert. If you're looking for those to get that read from a longer term standpoint. From a very short term standpoint, yeah, like I said, you're not going to really get a whole lot of clues until it's too late. You really have to buy the breakouts, buy as they turn up, and sell them right into strength if you're going to keep your stops super, super tight and your short-term trading, because by the time it's evident, Mark, I don't know, do you have anything else to share on that concept as far as, trading the shorter term moves? I know you're not one to trade the really short-term moves.
Yeah, I'm trying to remember what the original question was, but
Oh yeah, I've gotten away from that, of course.
I was gonna say, look, I thought your read.
Let me just say, it's if a stock rushes out from the breakout versus slowly grinds away, would you be more
And the
inclined?
example was on ON,
Yeah.
versus a Teva, which I don't think they're that much different.
They're not. Yeah, I was going to say I don't see that much of a difference. One thing I would say is, generally speaking, look, some of my best trades are at a profit the fastest because they're the hardest to buy.
Yeah.
A stock that puts you under absolutely no pressure, all things being equal, is one I want to give more of the benefit of the doubt to, maybe, than one that's just a slower mover. But both of those, are good examples of trades where you were put under no pressure.
Yeah. And this is a business of, of imperfection. I mean, you can perfectly trade your plan, but you'll very rarely trade perfectly. And so, this is all about probabilities and educated guesses. And the main thing is to make a decent profit, to improve your worst case scenario, de-risk, in various ways, whether it's selling part of the position or moving your stop up. And then from there, it comes down to really what you're willing to accept for a profit and a risk reward ratio. You can, to get a big move out of the stock, you're going to have to go through a lot of gyrations and big pullbacks that are scary and ugly. There's kind of no way around it. Very few stocks are just going to go straight up and not give you a lot of grief along the way. If you're going for a big move, if you're going for the small move, the shorter move, you're going to sell into that, maybe that first move, second move up, and maybe avoid some of that. But then, of course, you'll be sitting there watching a stock that you sold up 8, 10, 12%, go up 30, 40, 50, and maybe much more, that you're not in because you're avoiding that volatility. You can't really have your cake and eat it too. I think my strategy has gotten as close as to having the cake and eating it too as you can. And that comes from, mainly from, de-risking and proving your worst case scenario. I know I've digressed a bit, but just trying to give you some more color.
Roberto bought RDNT on
RDNT.
August 23rd.
Yeah.
Sold half of it today because intraday looked really bad. The rest of the stocks were reversing, and I had a lot of exposure with no profit cushion. My original stop was below August 21st. Looking back, I see that I frequently do this. Is this bad behavior?
Frequently do what?
And I'm going to
Exactly.
guess he's selling before the stop triggers, but I
Oh,
don't know.
oh, yeah. Well, it could be. I mean, of course, if the stock plummets here, you'll feel like you did the right thing. If it doesn't, turns back up, you'll wish you held your stop, right? So, but in between, you have to ask yourself how much risk you're willing to take, and that really depends, I think, more on where you are. Again, I can look at this trade and say, I can look at a stock and say if this is acting normal or if it's, showing some ominous behavior. But if you're underwater and you've got 10 stocks and all of them are doing this, well, that's a whole different scenario, that and based on your own personal risk tolerance, de-risking makes sense. If this was your only stock and you were 10% invested and, you had profits, well, I might hold here, and this wouldn't shake me out. It wouldn't make me decrease my position. So as Mark and I often say, context is everything, right? Um, but this is looking like a lot of these names. GE is a little more excessive. Some of these are a little more excessive, where you're getting some of that pivot leakage. But looking at this in the grand scheme of things, it really hasn't done anything that wrong yet. So I think playing the middle road and just decreasing your position is probably a good middle of the road play.
Okay. Eric is asking, when you grade, how would you differentiate between faulty setup versus a bad buy?
Well, a faulty setup, is just you look back and you look at the pattern, the pivot point, and you determine, what, I really shouldn't have. That wasn't that great looking. I was, sometimes we buy things and later on it becomes more clear. The setup actually builds more of a right side, it shakes out, and you realize, what, I was buying it compressed on the right side. I was buying it too early. I was buying it off of a sloppy pivot, and your emotions become more clear, later on, especially after the stock maybe resets and sets up better, and you see it looking better. It shows you how much it wasn't as good looking as when you thought. So that's really looking at the technicals of it. A bad buy, I mean, again, you can use your own semantics. Um, um, and that was the other one, right? Bad buy?
Yeah, bad buy versus a
Yeah,
faulty
bad buy.
setup.
Yeah, a bad buy, you could say is, taking a faulty setup, but I look at it at a bad buy as something like, I chased it, extended. I made a decision that wasn't a very good, maybe risk reward decision, because you could make a bad buy on a good setup. The setup could be really nice. And maybe you buy it too soon. You chased it, extended. You buy it, it doesn't break out, and you try to front run the breakout. I mean, there's a number of ways, but it's more semantics. I think though the bad buy, I would grade as my own decisions and emotions, and the setup, whether it's a faulty setup, is the technicals, is looking at did it meet the requirements, to be something that you could even consider buying. But it's still semantics, and I think by grading, you have to choose sort of your own list of what semantics you're going to use. You don't have to use ours.
Okay. A rule is asking a couple aspects of VZIO. Victor,
VZIO?
Victor,
Yeah,
Zebra, India, Oscar.
yeah,
And a rule you may not be aware, but this is in the middle of a buyout from Walmart. So that's
yeah.
where you may not understand how a stock that's sold off so much is now up so much, and not sure if this is viable or not, but that's in the middle of a purchase.
Right. What's the question?
Yeah, I think I answered it.
Okay. Yeah, if this is a, takeover, a cash offer, or a proposed merger, we would generally stay away from it.
But he is also asking on TSM.
Yep.
Consider this question ignoring today's price action. So this is what he had coming into today. Context is the stock corrected 31%. There is an unclosed down gap on July 17th. What impact do these two data points have on your stock purchase or position sizing?
I wouldn't care about the unclosed gap. That doesn't mean anything to me. The 30% is a little excessive, although you see it was very brief and it had a close up here. So I would look at this more as an effect of the correction of about 24% because it was so briefly there and came and had a great close with a big reversal there. So I wouldn't get too concerned with that. If the Nasdaq during this time came off 16%. So stocks usually correct, volatile stocks, tech stocks in particular, will correct 1.5 to as much as 3.5 times the general market. 3.5 will usually be in a severe bear market, but in normal corrections, you can easily get 1.5 to 2 times the general market, and this is right in that range. So that's actually pretty normal. It does create a little bit of a supply issue, because it's a bit V-shaped and came back so quickly, and I think that's what we're dealing with right now. And now we have to see how that supply is handled and whether it can calm down, tighten up, and reset here.
Okay. John is asking for you to review O'Reilly, ORLY.
I mean, these are stocks that, just they keep on going in the long term. AutoZone and so forth. This is a classic cup with handle. I think this DRS and our RPR is a bit low if I remember, but I'll look into it. But yeah, this is set up. This is set up in a classic cup with handle.
Okay.
But I think isn't that low on the RPR?
That's
No. Yeah,
79, 79, Mark.
yeah, so that's a bit low, and I think the TPR, because of that, the TPR is probably maybe a C.
Checking that right now.
Yeah. We're going to be having a dashboard added to.
It's a B.
It's a B. Okay, so it is a B. So that's something that's 79. A B TPR is one that you can consider. The 79 is a bit low on the relative strength. There's a couple other stocks I've been looking at that have the lower RS. I think it was an FLUT. A couple here that I'm not sure if this is it, but there's a couple that I had on watch here that I was looking at that were lower relative strength. But I like to be in that 89 plus if all things being equal. But I was pointing out we're going to have a toolbar or our own sort of navigation bar, if you will, above the charting, which is going to show the TPR, the buy risk. It's just going to have like a snapshot of everything. So you'll be able to immediately see everything, all the readings and the RPR rating. That's coming with the redesign, but it'll make it a lot easier for you very quickly to just get a snapshot and see all the readings of our own proprietary readings.
All right.
In any stock.
Mike is mentioning his normal position size is 12%. With the market pulling back here, I'm getting stopped down on my winners. So do I start back with 6% again instead of the normal 12% since I'm seeing so many squat reversals?
There's a number of ways you can do it. I mean, it's really, it's a risk tolerance is a personal decision. Sometimes I go in there and I stick with my same size, but I tighten my stop. That also depends on what, technical entries I'm being offered. If there's a really tight entry, and I can go in there, something like a Spotify here is fairly tight here. It was very tight. Maybe, let's just, pretend this is, from the breakout down here is only 2%. So if that were to break out and then engulf and then take out the low and that pivot, that would be acting abnormal. And I would reduce or maybe sell, and I'm only risking a couple percent. So I can take a bigger position size. So again, context is everything, and we've got to take a look at, how we're going to find out whether we're right or wrong technically, and that has to be married with percentages, what your mathematical tolerance is. So this is really, a combination of having a mathematical tolerance of risk, position sizing, and then backing into the trades. And this is where we talk about, and we go over this quite a bit in the Master Trader program about backing into risk and using your stop loss and your risk tolerances as selection, part of the selection process. So, I'm going into a trade based on how tight that right side is, and that's going to let me know if I want to even take that trade and how much risk I want to put on that trade. And then also, we're going to be talking about when we're going to look at liquidity. There's a number of things that when it comes to risk, there's your stop, there's liquidity, there's the spread, there's your position size, there's your overnight risk, your gap risk for news. If you're going into something that maybe, ALNY is a perfect example. This is one that one of our members actually, talked about and warned about, a potential phase trials that may not come to fruition. You're taking that kind of risk overnight, where if a stock, maybe doesn't have earnings and it's trading on some drug that's in the pipeline, you could get some news. This, luckily, we didn't get torpedoed too bad. It was, not a huge hit, but it could easily have seen stocks come down 50% on bad news on a, maybe a phase 3 trial that didn't go well. So again, those are your various elements of risk, if you will, or your pieces of the risk puzzle that have to be considered.
All right. Mark is asking if you're looking at BLFS as a post-earnings drift type of play.
So we have this on, focus. But what is the question? If I'm looking at it as a earnings,
Is this
what?
a post-earnings drift type of play?
I mean, well, we'll know in hindsight if we're getting post-earnings drift. They're all post-earnings drift plays. I mean, we're if you get a good earnings report and it sets up, that's what you're hoping for, is that the stock hasn't fully discounted. And the bigger the earnings, the more that can happen, because when you get into really large earnings, when you're in a company that stays growing at 100% a quarter, there's only so far that can be discounted. You don't know. The CEO of the company doesn't know if they're going to be able to sustain that kind of growth for years to come, or even several quarters. So when you get into the stalwarts, the slower growth, it's more predictable. It's easier to look out further. So you don't have as much of an opportunity for big post earnings drift. So looking at post earnings drift, the bigger, the stocks that have the bigger earnings and have the big surprises and get the really good responses on the earnings, that's where you're more likely to get that post earnings drift. But we're always looking for post earnings drift.
Well, I think he's saying from the earnings reported 3 weeks ago, would this be considered a post-earnings drift type of play?
It's not a term I use as far as a post earnings drift play. I don't. We're always looking for post earnings drift. That's my answer, and I'm going to stick to it.
Ravi is asking for AAON prior to today's
AAON.
Prior to today's volatility. How would you describe the right-hand side development? Is it too short?
I would say it's a bit sloppy, and this giant decline here. This is a scary looking chart to me. There's a lot. You got volatility all over the place here. I mean, it could work, but not one that would generally make my cut with this type of look.
And on IESC, how would you view the breakout from the right side on August 23rd?
Hold on one second. I just gotta put on my screen here. What was it? What?
ESC.
Yeah.
Yep. The breakout on August 23rd. How would you view that? He thinks the setup looks similar to ATMU that also broke out on August 23rd.
Yeah, I don't, this one had this accelerated advance here. Just not my favorite. It's had a big move, and then you have an acceleration here. I don't know a whole lot about this. I have to look into it a little bit more. You had a 60% move here in like 3 or 4 weeks. So that's a climax move. And then you have a base, right after that. It's not a real tiny base, but it's a base that's sort of wedged up here. It just doesn't have the look for me. With this acceleration here, the climax move, this could very easily be, a stock that's topping. It's strong, and this the right spot to play it would be, as it's coming up this right side. I don't think there's anything wrong with that purchase, but not one that would make my cut.
Gabri is saying during the last 3 weeks, he has lost almost all of his previous gains being in the wrong names, listing a bunch of them. My entries were good, but I've been stopped out on all of them. Was I just unlucky being in the wrong stocks?
I could, that's completely invisible to me. I don't know what stocks you're in. You could have erased 1% with all your gains. I don't have enough information. I'm sorry. I don't know what those gains. If you erase 30%, I mean that's a bit different than if you, gave back 2%. So
Yep.
there's not enough information for me to answer that question.
Question, bought 25% position in GE on the 28th with the platform and then went overweight on the 29th. If you had been overweight, would you have cut the overweight when price squatted on the 29th? More broadly, I'm trying to understand how quickly you are to cut overweight positions when they don't fall through immediately.
Pretty quickly, I'm usually cutting overweights like, super, super fast. So yeah, I mean, I would have cut it, basically this is how I look at an overweight. And Mark, you can maybe share your views on it. Probably similar. When we go into an overweight position, if it doesn't do what we expect it to do really fast, that's our stop. Our stop isn't usually, as much a technical stop. It might be, maybe the previous day's low, or, maybe we do set some technical trigger, but it's going to usually be very tight. And the bottom line is, though, the stock didn't do what I expected it to do. And if I'm going overweight, I'm expecting it to go up very quickly. I'm not going overweight thinking it's going to pull back and I'm going to go through a pullback because I don't want to be sitting with a pullback on an overweight position. So basically, if it doesn't go up right away, I'm usually going to get out of it. I don't know, Mark, is there any other way to?
Yeah, absolutely. Yeah. Well, it's more of just, I think the way you described it, Mark, in terms of thinking of that overweight part of the position is what you're not willing to take much pressure on. And this is where I don't even want to add that type of exposure if the timing hasn't been working. If those breakouts aren't really coming in on a schedule. So they sort of go hand in hand, but that's exactly how I think about it. What am I willing to sit with? Well, if I'm in a position that's too large to sit through a pullback, that's the part that has to go.
Yeah, the more profits we would have, backlogged would also determine how much, maybe we're willing to sit through some pressure on an overweight position. But again, context is important because if you're going overweight before you have any kind of real, and I'm okay with, if you want to go overweight before you have traction, that's fine, but you better be doing it from a really tight entry and with a tight stop and the liquidity to get out if things go wrong, because you don't want to get yourself in big trouble. So you don't have much cushion. That means that there's risk of getting yourself underwater. So you got to think about that and be smart on how you approach that. Now, if you're up big and you've got big profits and you're leaning on a lot of profits, maybe closed or open or combination, you get a bit more aggressive. But still, you don't want, the goal is to be trading large when you're trading your best and small when you're trading your worst. So you want to be overweight when things are working. And if they're not, you definitely got to get off of overweight quickly. And that goes for margin too. If you're using margin. Same rules apply.
Okay. Question on BKTI.
BKTI.
What is more needed to consider this a power play or power play-esque? The up move is 90%. The last contraction is under 7%. Total pullback never exceeded 9%. That looks like strength to me. I don't understand. I do understand we need minimum 8 to 10 days for power play. Was it viable on 8/29?
I love 8 to 10 days. It just keeps getting shorter and shorter. So it used to be, 3 weeks, and now we're 8 to 10 days. 10 to 12 days is, I was giving some that slack, and now we're down to 8 days. I'm sure people will be trading it after 3 days and 4 days. Pretty soon it won't be any base at all. At some point, you just have to have a cutoff, and if the stock goes, sooner, and then you miss it, but you have to have some cutoff point where otherwise you don't have any rules. This stock has moved, sideways for about 6 days or so. It just isn't enough stabilization. You can try to play it for, some stocks go up, they double, they correct for 3 or 4 days, and they go up 50% from there. And the power play setup that you have a nice base of maybe 3 or 4 or 5 or 6 weeks doesn't happen until the stock's up 160%. And you could look back in hindsight and say, well, I should have bought. I mean, you could say, well, should have bought it here. The stock went up 50%, pulled back for one day, hit new highs. That's all in hindsight, though. It's a matter of, can you do that over and over? Is it reliable? Is it going to work more times than it doesn't? Is the upside going to pay for the risk? Those are the real important questions. In hindsight, you can look and find anywhere where things worked. So, very simply, you just go to my book and you can read the rules. Does this stock meet the rules? 91%, I'm okay with that. A 90% move, 100% move, that's fine. Give it 10%. We like to see 100% minimum, but I certainly go into one that's up 90%. But I'm not going to go in and after 3 or 4 days. No.
All right. Question being asked on Wix, WIX, which was sold on 8/26 in the Minervini Select.
Yeah.
This was the low of the breakout day before it failed. Why was this stock sold at the low of the breakout instead of the pivot low?
That's when we decided that we didn't want to have any more risk on it. I mean, it had a big reversal. I don't remember. I can't tell you exactly what I was thinking or what Mark and Brandon were thinking at the time, except that this, suffered a very large reversal. I don't know, Mark, do you have any recollection of what we
Yeah,
were thinking at that
it was
time?
exactly that, basically. And, that we didn't have a ton of cushion either. So we weren't going to widen at that point. And yeah, the squat was pretty ominous. So we just decided to kick the position.
Yeah, we're looking at it as probably going to take some time, need to go inside and take some time. So we'll just, cut, run, take a small loss and come back to it. If it holds up and it resets, we can always come back in.
Then a follow-up to that is, if do you have any rule of thumb for when you would use an intraday stop versus a technical stop where the chart sours?
Well, an intraday stop could be a technical stop where the chart sours. I'm not sure the differentiation of that. I mean, but I'm not using an intraday chart, if that's the question, versus a daily chart. I'm still using the daily chart, but I might sell just simply because the percentage amount is too much that I want to endure. But I'm not using intraday charts to make a decision to sell.
All right. Fahimi is asking on Monday, MNDY,
Why?
if that would have been viable if it broke out, or is it too compressed on the right-hand side?
Be nice if I can get a chart. So it's compressed. It's definitely compressed up the right side, and the risk is elevated of volatility. These can work at times. This is a sort of a hybrid of a Hardaway crossover. It's a little bigger. You've got this right side being built. It shakes out the low and it just comes ripping back and gives you no way to purchase it if you're looking for a pivot, obviously. This can happen on news. It can happen sometimes on no news. You can buy, sometimes you can buy these at the first pullback or if it undercuts a recent low. This is similar to SG. Tried to play that where it came up here, ran up the right side. And after it came in, started turning up off the lows, I bought it. But again, like I pointed out with this, there was a good chance, it's a higher failure rate, a much higher failure rate. So to make up for that, I had to stop very, very tight. It was just a couple percent. So, and that's the same way I would play something like an MDNY or MNDY.
Okay.
And again, see, it's something like SG. This isn't broken. This could easily set up here on the right side. It's probably going to take a couple weeks, maybe a week or so, to get a potential pullback buy in a couple weeks, and you may have a really nice base set up here. It's just you got to live through it now. We tried it here, it didn't work, but that doesn't mean that it's necessarily finished. This is now a stock that's still moving sideways in a base and just needs right side development.
Okay. Coming from a correction, if the initial 2-3 stocks weren't having a profit but acting normal, could that be used as a reason to progressively scale up?
Yeah, absolutely. Mark, I think that's essentially what we did, right? And with the Minery Select trades, we scaled up pretty quickly and
Absolutely.
had a little bit, little bit of profits here and there, but not a whole lot. And the way we did that was by just staying really tight on the stops, and keeping the risk super under control. So yes, but I wouldn't get too aggressive. I certainly, if you're going to get aggressive without any traction, you got to do it from an extremely low risk standpoint, and with your stops.
Yep.
It's a matter of how aggressive you want to get and how soon, and after a while, you're going to get a ticker sense. You're going to get a feel for the market. And I could just tell you right now, I've been doing this for 41 years and I have a great feel for the market, and I'm wrong just as often as I'm right. So again, it's not about being right or wrong. It's about managing wrong versus right, managing your wrongs in relation to your rights, and keeping it, when you're wrong, the mistake's small in relation to when you're correct. That's what it's all about. The same thing in golf and in sports, and Tiger Woods doesn't have huge blowups. He manages, the downside quite well. An amateur, might could have a bunch of eights and triple bogeys and double bogeys in a round. Tiger Woods is going to have, they're going to be on rare occasion. I'm going to make myself, Mark, Brandon, David Ryan, Bill O'Neill, whatever, trader that is an accomplished trader you want to point to is going to make, far less major mistakes than an amateur. And that's the key, is to get to where those mistakes are relatively small, and you're there to play the times where you're quote unquote lucky in a position, where things are working.
Timothy is asking both Marks. It's a very long question. Let me read it all the way through and come back to it. Philip is asking question regarding stocks with recent declines that are a bit bigger, like Palantir, AOSL, AEYE. I have some idea, but I would like to hear from you what makes these declines less ominous. This question may be too vague. Then just look at AEYE.
I don't know. I'm not too clear on the question. I don't know. Are you, Mark?
I think maybe he's referring to if it was that decline, from say 30 back to 21 there, been late July, August, asking if, because percentage wise, what makes that not ominous? I'm not sure, but in terms of if he's thinking percentages.
Yeah. I mean, this is a pretty big decline, but basically I'll give you the same answer I gave before. You see the close here, you got a lot of support. So I would look at this as more of an effective decline of about maybe 18, 19%. During this time, the NASDAQ came off 16, 17%. So even all the way down here is normal, but it came back very quickly, and look how fast it got back at the new high ground. Now, what's that? I'm sorry.
That's what I was going to point out, is 4 days at a new high ground. That's incredible.
Yeah, that's credible resilience on how it came right back here. Now, now the issue is the supply issue and that right side being built, where the reason why we want the stock to quiet down and get tight is because we're looking for the line of least resistance to develop. This goes all the way back to Jesse Livermore, and it's a brilliant observation. Bill O'Neill based everything he did on the same thing. That's what the cup with handle is all about. And basically, the reason why we do that is because we want to be at a profit right away. And if there's no supply, if we get an indication that supply is diminished, or if there's not much supply, well, then even a little bit of buying can make the stock go up, and you don't have that selling pressure. So you can get at a profit very quickly and get yourself in a position where those options open up. So, and again, time is just as valuable as price when it comes to trading stocks. If I buy a stock and it goes up within a matter of days and you wait weeks or months, I've got capital to compound and I can get a bigger return, right? So there's a number of reasons, but looking at a chart like this, that when you get this type of volatility, that's sort of the quagmire that you get put in. Okay, well, it's showing some real strength here, but where do we get on board? And that's where, we're going to look for those tighter entries. I can just, go in there with this type of volatility, and play the volatility game. I'm not sure if sorry, that might not be the greatest answer, but trying to give you some color on it.
Yeah, I think that helps. Gary's asking on INSM, which triggered a pullback buy on August 28th, but it appears to me to be a pivot failure that would require a reset.
Yeah, I mean,
the question is a pullback setup considered the reset in this case? Or if so, would you consider that the setup had degraded as it neither triggered tighter, as it is neither tighter risk or higher? And is it a play you would take?
Again, my head's spinning. There's so much there. I'm not sure what the question actually is, but I'm just going to tell you that 822 is the buy point here. That's where it tightened up quite nicely. That's really, your optimal buy point. And from there, comes in for a few days, it catches some support here, and then you're talking about the 28th as a pullback buy. I look at that as a weaker pullback buy because it broke out and it didn't hold. So, but that's where pretty much, the rubber meets the road. Now it's getting a bit abnormal here, right? If we get a bad close here, you get below the 50, you're going to see violations are going to start piling up here. You're going to start seeing some violations. We're at Monalert. If we close like this today, you're going to get an outside day, close below the 20, maybe close below the 50. So, that's the way I look at it. I don't really understand the question, all that you were asking. To be honest with you, I don't know, Mark, if you have a better answer to answer this question directly.
No, I think it was more of, was he saying, is that pullback buy qualify as some form of a reset or of a failure reset? And I would just, some of it's semantics, but yeah, I would say no, because it never really failed.
Right. It didn't fail. This was normal action. You can very easily get a breakout that comes in for a few days, undercuts the pivot by a few percent, for even 3, 4, 5%, and then sets up that pullback buy. That can happen, a lot of times, probably 40% of the time. 40, 50% of the time, a stock comes back and tests your breakout level, or the price that you bought at undercuts it. So you're going to be at a loss, whether it's a small loss or maybe a little bit larger loss that is pushing the limits of your stop. You're going to be at a loss about half the time after you make a purchase. So people are surprised. They buy a stock and then it doesn't go, and then they're down 0.5%, 0.75%, 2%, and they panic and they sell. Okay, that's fine if you want to sell down 2%, but that's your stop. But then your timing is going to have to be even more precise, and you have to accept a lower batting average, because the tighter you tighten the stop, obviously, the closer it is, the more you're going to get stopped out, theoretically at least. So yeah, but I would say no, this is not a reset.
Coming back to the Timothy question, he's sharing a lot of statistics and such that what it comes down to, he's asking to see what the winning rate is for Mark and Mark. He's been experiencing a real challenging time for the last number of months, and at a 23% win rate, but even though he was up for the first January, February, I guess he was sharing. and
So,
getting
the
frustrated.
the Minerva Select portfolio, I just ran the numbers. I don't have them in front of me because I was going to share them during our session. Let me see, did I write them down anywhere? I'm trying to see if I wrote them down. I have them on a slide that I was going to share. So when we do our MSP session, I'll share those. But off the top of my head, the average gain was right about 6%, I believe. And the average loss was 2 change. So we were like I think we were like 2.46 to 1. So we're managing the risk reward relationship really well, even though it's very small right now, but that's all we're getting. So we can only deal with what the market is throwing at us. But the batting average was, I believe, 27%. So that's really low. But here's the thing, we were up actually as of just, yesterday or the end of the week. And we're talking about being right only, 1 out of 4 times. So that is precisely how you want to trade. And then when things are working, if you can break even with a 25 to 30% batting average, when you've got a 50 or 60% batting average, you're printing money. So that's the goal. So I would say, it's normal to exactly what, we're experiencing in the Minerva Select portfolio. And Mark, I know you and Brandon have been frustrated with the lack of follow through and progress and have been jockeying back and forth quite a bit. I would think that your batting average probably in your own trading is probably close to that, right?
Yeah, it's a little higher, but yeah, it's pretty similar. I mean, in terms of it's just the risk reward relationship's intact, and not that win rate has not. We're just under 40, but with about a 3 to 1. Yeah, in a better environment though, that's where we're going to do a lot better. So, and we don't have the control over the win rate, just kind of how we look at it. So when we're in that period, we're just taking a little bit slower and a little easier.
Yeah.
And Tim's numbers are near identical. 6.83 win, 3.03 loss. So you're 2 to 1, well above 2 to 1. So perfect in that sense. And the 23% batting average, you're pretty much experiencing what we're seeing as well, Tim. Sounds like.
Yeah. In my experience, if you can keep your losses at half or better than your gains, you can withstand quite a bit of trouble in the market. You can weather a pretty low batting average, and that's what it's all about. So, my main focus is to always keep my losses at a fraction of my gains. And if I can accomplish that, if I can manage that risk reward relationship, everything else works out over time. It's just a matter of time. And when trades are working well, now, of course, you've got to you've got to expand your holding time. When things start working, that's where you've got to sort of change gears, and maybe you're grabbing some of those shorter term profits, but you've got to have the sense to switch your game a bit when things start working and get more greedy, and maybe even more aggressive with size.
Right. Linda is asking, how would you read the volume when it has a big increase? But it doesn't make any significant change in the price. Does that matter in terms of supply and demand?
So that's called churning. When you don't have any price progress, that's not really that only would really matter at specific points if the stock was running up and was super extended, and then you started seeing churning around the highs. It's a very finite, observation that I wouldn't get too concerned about. But yeah, volume without progress is called churning. And
Okay.
I'm sure you could read about that online. And, certainly I think O'Neill's books talks about churning, but not in any great detail.
Ian's asking your thoughts on C and K holding up well today.
C and K. Yeah. So I don't know a whole lot about this particular stock, and looks like it hasn't really met, a power play. So, okay, it's holding up well, but there's no base. It's just an extended stock. So I'm buying stocks from bases. So if you're in it and you're holding it, great. It's acting well, and I would stay with it.
Okay. George is asking if Costco could be a pullback buy once it broke out over yesterday's high.
Not a pullback buy that I'd really be interested in. I don't really see a really good right side being developed here. It kind of wedged itself up. It's a little wonky. So I wouldn't buy it. Costco is a great company. And certainly, any pullback that tightens up and goes above the previous day's high from inside day is a pullback buy. But it's, the quality of it, where it resides within the base and so forth. This just doesn't have the look for me. But yeah, I mean, if you're interested in Costco, that would be the spot. If it holds up here, and it can turn up from here, that would be your pullback buy. Looking at it in the microcosm.
Uh, Braxton is saying your second book says that almost every base VCP failure that occurs is due to some faulty characteristic that is overlooked. What are some of the faulty characteristics you look for when assessing the VCP to let you know it may have a higher chance of failure?
Well, even perfect setups can fail. So, but that's because the overall general market. So it doesn't necessarily have to be within the actual stock setup itself. If the overall market's going into a bear market, you may have setups fail. And usually, though, in that situation, you'll see some cracks, within the overall block in maybe prior leaders. And you'll get setups, but a lot of other setups maybe are late stage. It's a great question, but it's not one that we can just pinpoint. There's lots of things, and again, that's why we developed Monalert, because then you'll see whether you're getting the violations or not. But Monalert, looking backwards in the setup, and if you were to look at a base, I know we had a question, I think it was last week or the week before, was asking about distribution on the left side of the base. Well, that's where you're going to get distribution. So Modeler's going to show you a whole bunch of violations on the left side of the base, but that's where you should have them, right? So again, it's all about context and applying it at the right spots. Yeah, so there's a number of reasons of what can be faulty. Not something that I can go over here every way that a base could be faulty. But what I will say is this: you don't want to look negatively and say, what's wrong with this? You want to find stock setups that are set up properly, place those trades, and then if they don't work out, that's the information that you need. Now, if they're not working, well, that's pretty much all you need to know. As long as you're buying from solid, constructive setups, they should be working. If the market's right, if the stock setup's right, then on balance you should be having gains, and your gains should be outweighing your losses. And if they're not, that's really all the information you need to know. So there's a million ways things can fail, but there's only a few, a number of things to get it right. There's far less attributes to look at for the setup to be right than for it to be wrong. So that's sort of a backwards way of thinking about it sometimes. I remember Bob used to think that way too. He'd say, look at it, what could go wrong, and look for the problems. I look for stocks that look like past precedents. I want to go and find trades that worked, and stock setups that were of past leaders, and then back into setups that have those same attributes.
All right, finishing up here with a few last questions or last few minutes here. Tobias is asking on GEV, was that stock buyable on August 29th?
Yeah, I came very close to, buying this when you see it gap. I wanted to see it just tighten up a little more. If it went inside maybe one more day and then didn't gap out, I would be in it. It was buyable. I would say, it would be stretching a little bit. The gap wasn't big enough to avoid it. But I wanted it to tighten up a bit more. There's a lot of reversals here, and I was looking at this as, potential, failure in the making. You had a lot of supply. At least it looked like there was a lot of supply here. But yeah, I mean, it was viable.
Also, if you think GRND was a potential pullback buy on August 29th.
August 29th. Yeah, but I'd rather see it tighten up a bit here, like it goes inside here, and then this morning, I don't know if this took out the low first, but this could have been a pullback buy. If you're interested in this, but now I'd like to see this go inside. It's getting a little volatile here. If this can go inside, maybe for a couple of days, I'll show you. Use my imagination, and that would be preferable for a pullback buy. A little bit more development here. This one is on my watch list. It's not high on deck, but it is on my watch list. Grinder.
All right. Let's just see. As typical, guys, we're not going to get through all the questions here today, but as we do have the opportunity for another Q&A session on Thursday with Mark Ritchie and Brandon. Also, Mark is alluding to perhaps having a session to review the Minerva Select as well. No earnings on our open positions as of this time or this week. Of
Yeah.
course, that we're pretty much out of that season now. So, but always stay in tune with any names that you may be trading for that type of information.
Well, let's see what happens, how things develop here, whether we're going to do this Minimum Select session. It'll probably be tomorrow if we're going to do it, because we have a shortened week this week. Tomorrow or Thursday. If not, definitely next week. But let's see how things progress here in the market and what there is if there's things to talk about.
Yeah, and stay tuned for the replay being posted here momentarily. And with that said, I'll thank Mark and Mark for their time today, and we'll get back at it soon.
Okay, all right. Let's keep watching here and see how the day transpires. Talk to you guys later. Monitor the platform for updates.